This conference will now be recorded.
Okay, so today let us talk about something related to your MM and SD integrations with finance. In short, FIMM integration, FISD integration, which is very, very important in every interview that you attend for FICO. Okay, so let's put the heading as FIMM and FISD integration. We're not going to talk in detail about it, but we're trying to understand what are the basics, what are the important points that you must know about FIMM integration and FISD integration from interview point of view alone. Now, to begin with, first thing that you'll have to understand is business process. When I talk about business process, if you take any business, if you take any organization or any company, when we talk about business is all about making profits. Am I correct?
Yes, sir.
Right? If I'm
Yes,
not
sir.
making profits, if my intention is not to make profits, then I'm not going to call it as a business. So I am calling this as a business because my intention is to make profits or gain profits. Now I have to make profits. I have to make profits. How I'll get profits? What I need to do to make profit? What is to be done to get profit? Should I spend money to make profit?
Yes.
Should I spend money to make profit? If I spend something, let's say if I go and pay some 1 lakh rupees for purchase of some, utilities, some stationary items or some day-to-day expenses in my organization, do I get profit with it? No, right?
No,
I'm
sir.
not going to get profit by making expenses. So what is needed to get profit? What activity I should do to get profit?
You need to make sales.
Sales.
I have to make sales. Clear? We have to make sales in order to get profit. But when you are talking about the sales, what are you going to sell? When you're talking about sale, you are selling something, right? What is that something that you're selling?
Product or service.
Right? When you're talking about sales, you're talking about
Goods or service.
goods or services. Am I clear?
Yes, sir.
We're talking about sales, you're talking about sale of goods or sale of services. Now, if you have to sell goods is nothing but a material or inventory. Or if you have to sell a service, first of all, you should have that product available with you, correct? Huh?
Yes, sir.
Before you sell it to your customer or before you sell the product in the market, first of all, you should have that product available with you. How you will have product available with you? What you need to do to have the product with you?
Manufacturing.
Option number one, manufacture. Option number two,
Purchase.
or
Purchasing.
purchase. Right? Option number one, you have to manufacture the product. Option number two, you have to purchase the product. Only in these two kind of scenarios you will have the product available with you to sell it in the market. Am I correct?
Yes, sir.
Now, is this a mandatory process in any organization or not? Purchasing and sales. Is this optional business process or mandatory business process in any organization? Purchasing and sales.
Mandatory.
Purchasing and sales is mandatory in every business that you take, right? Without purchases, without sales, there is no organization. Now, when we're talking about purchases, when you're talking about purchases, major purchases happen through purchase orders. When we talk about purchases, you have to keep in your mind major purchases will happen through purchase orders in any organization. Similarly, when you're talking about sales, same point. Major sales happen through, if purchase is purchase order, sales is what order? Sales order,
Yes, sir.
right? Majority of your purchases will happen through purchase order. Similarly, majority of your sales will happen through sales order. Now, why we have to talk about this integration or SD integration in a FICO interview, right? So if it is integration, you have a dedicated consultant. If you're talking about SD integration, you have a dedicated SD consultant. But why you will be questioned on this topic as a mandatory topic in every FICO interview? Because this is something which is not directly posted in accounting, right? Your and SD will trigger the postings. Transaction is initiated in the module, transaction is initiated in the SD module, but it will have a financial impact or the financial implications or your accounting impact on your FI module. No user is going to log into the system, select the company code, put debit, credit, GL account, customer account, vendor account is not going to happen. All this financial entry is automated. How this automated financial entries are coming from your side and from your SD side is what you have to understand as a business process from the organization point of view, not only from the FI point of view, but from an organization perspective, you have to get the point, right? Now, before we get into that point, so you have to first talk about materials. We are only going to understand the basic points, terminology that you have to understand in order to understand integrations of and SD. When you're talking about material, material is what?
Goods.
Material is something that you can touch and see it, correct?
Yes, sir.
If I'm not able to see, if I'm not able to touch, then I'll call it as a service, right? Any physical object, I call it as a material. If I'm calling it as a material, again, this material is classified into different categories. Majorly, you will have to understand 4 categories of material. What are those 4 category of materials?
Raw material, finished goods, packing material,
Raw material, semi-finished material, finished material, and
packing material.
packing material. Clear? This is one thing that you'll have to first remember. This is not only with respect to SAP, we are now talking in general to an organization point of view. We are not connecting this to SAP. We are only trying to understand the impact of this business process in any organization. And the same thing is applicable to your SAP. Clear? Now, when I have raw material, when I have semi-finished material, when I have finished material, packing material, now if I want to purchase this, normally what material am I going to purchase?
Raw
Raw
materials.
material.
Normally we purchase raw material and then we will prepare semi-finished material or finished material. Is that correct?
Yes, sir.
You will buy raw material and then you will produce semi-finished or finished material. Sometimes you will also purchase a semi-finished material. You will also purchase the finished material. If your business is trading business, You're not going to manufacture anything, right? You're directly going to purchase and then you're directly going to sell as it is, unopened, sealed packs, correct? It depends on the nature of product, it depends on the nature of business that you're talking about, right? So you have to be very flexible, you have to be very understanding in terms of business process, especially when it comes to your MM and ST integrations. So that is the reason you will have to be good at understanding the business process. The kind of example that you are taking will differ, will make you get into different confusions, right? Now, assuming these are the four type of materials that you have, for each material in SAP there will be a code. For each material in SAP there will be a code. Now these codes we will try to understand when we are talking about this integration with respect to SAP, maybe in the upcoming sessions. Now, if I have to purchase this, to purchase any material, we need cost, correct? To purchase any material, what is needed? You need cost. Am I correct? Is that right?
Yes, sir.
If I have to purchase any
Yes,
material,
sir.
I need to incur some cost. I need to spend something. Now, this material cost, or you can also call it as price if you are confused, is of two types when it comes to your material valuation. Material prices. You've got two. One is standard price and moving average price. What are those two prices? One is
Standard
your
price and moving
standard price and
average.
the other one is moving average price. This moving average price is also called as your weighted average price. Now you have to understand how this pricing happens using standard and using moving average price. Let's say if I take an example, let's say purchase of milk, or I'll say purchase of milk packet. If I simply give an example of purchase of milk packet, or I'll simply put 1 liter milk packet. Normally, what is the average price of 1 liter milk packet? Or normally you get half liter milk packet, okay, or 500 ml milk packet. What is the normal price in the market currently?
20 rupees.
20 rupees.
20 rupees. Okay, this is what the price currently in the market for 500 ml milk. Now, is this 20 rupees common for all of your milk brands, or it differs from brand to brand?
Brand to brand it differs.
It will differ brand to brand. Let's say now if you're talking about purchasing of milk, now you're talking about purchasing of a milk for a house point of view, for a company point of view. If you're talking about purchase of milk, now anything that we discuss not personal point of view, we discuss from an organization, from a company point of view. If you are purchasing a milk for your house, you may probably need one packet of milk or two packets of milk. Agree? But if you are purchasing these milk packets for your organization, let's say you are manufacturing sweets. or you are manufacturing any other milk product. You need milk as your raw material. You cannot manufacture milk. Am I correct? Milk is something key ingredient or raw material that you have to procure from the external sources. So you are purchasing milk packets. On an average, each milk packet is coming for 20 rupees. Each milk packet is coming for 20 rupees. Now, what are the brands that are available for milk in the market? Let's say Amul I have, Heritage I have. What else? What are the other brands of milk packets?
Nandini.
Country delight.
Okay.
Vijaya.
Okay. Enough. Okay, like you have various other brands also. Now, according to you, everything is milk? Or do you find any differentiation in milk? When you see, you are going to see it as a milk. Am I correct?
Yes,
I
sir.
am going to tell you that we need 20 liter of milk tomorrow morning. Then what requisition or what order you are going to place to your purchasing or procurement team, you will simply give them an indication or a request that we need a 20 liter of milk tomorrow morning. Now your procurement team or purchasing team may ask, may not ask which brand milk do you want, right? Here the main content is milk. You want milk of 20 liter. Now I'm not specifying I want only Amul milk, I want Heritage milk, I want Nandini milk or any other source of milk. In this case, let's assume average rate for milk is 20 rupees per packet. Am I correct? Average rate per milk is 20 rupees. Let's say this is 21 rupees, this is 20, this is also 20, this is 19 rupees, this is 20 rupee 50 paisa. Possible or not? This kind of prices in the market?
Yes, sir.
Yes, sir.
Possible, right? Now, let's say now when you are purchasing milk from the market, now in market there are different sources of the same product. According to you, what is the product that you are purchasing? According to your business, which product are you purchasing?
Milk.
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 According to you, you are purchasing milk. Milk is the product that you are purchasing. But when you go to the market to buy milk, you are finding milk in different brands, different names. Now, according to you, when I say according to you, according to an organization, according to a company, are they going to classify as Amul milk, Heritage milk, Nandini milk, Country Delight milk, Vijaya milk, or everything is classified as only milk?
Only milk.
Agree? Am I correct? According to me, everything is milk. Yes, no?
Yes, sir.
According to me, everything is milk. But when I go to the market, I am finding different rates, different rates, depending on the brand, depending on the quality. Depending on the brand, depending on the quality, I am finding different rates in the market. But for me, from my business perspective, I am going to treat milk as a raw material, which I am going to use in my production or manufacturing or any other business activity. So milk I will treat as a product. Okay, so this milk will have two attributes. So let me put material. This will have two attributes. One is quantity, the other one is value. What is quantity? Quantity is nothing but the content that is available with you currently. Am I correct? If you're talking about milk, can I say I have 2 kg of milk?
No.
I'm talking about milk. I should not say I have 2 kg of milk. I cannot say I have 1 box of milk, 10 boxes of milk. So I need to have something called proper unit of measurement. Yes, no?
Yes, sir.
So how I'm going to measure my milk? I'm going to measure either in packets or in
Liter.
liters,
Yes.
right? If I'm dealing with packets. So again, in packet, I have to be very specific. I cannot treat everything as a milk packet. I have to be very specific whether this is 200 ml milk packet, 500 ml milk packet, 2 liter milk packet, 1 liter milk packet, and so on. Assuming I am measuring in liters. I have 20 liters of milk. Now this 20 liter of milk will have any value or not? Will this 20 liter milk have any value or no value?
It has a value.
It has got a value, agree? Because milk is not something somebody gifted you, correct? Huh? Did anybody gift us milk? Or we purchased milk?
We purchase milk.
We purchased. Nobody gifted us. If somebody would have gifted, yes, we can think this milk does not have any value because we got it for free. But that is not the case here. We've spent money, we purchased it. According to you, the average market price for the milk is 20 rupees. According to you, what is the average price of the milk? 20 rupees. Now, considering this 20 rupees per 500 ml, for 20 liters, what could be the value? 800 rupees. Is this correct? 800 INR. 20 per 500 ml. So for 1 liter, it will be 40 rupees. For 10 liters, it will be 400. For 20 liters, it will be 800. Is my calculation correct? Yes, no?
Yes, sir.
Is 800 for 20 liter quantity correct or wrong?
Per liter is 40 rupees. 40 into 20 is 800, right?
800. So the calculation is correct. Let's
Yes, sir.
say this is your calculation, which is correct. Now, how do you say that this 800 is correct? How can we say this 800 is correct? Now, in the first statement, we have assumed most of the purchases will happen through what? The first
Purchase
statement
order.
we've agreed. Most of the purchases will happen through purchase order. Now, according to that, this 20 liter of milk is something that we purchased through purchase order, or somebody went to a shop and then picked them up. What could be the ideal scenario? Through order or a direct purchase. The ideal business scenario is what?
To purchase order.
Through order.
The ideal business scenario is through the purchase order or through the order. Now, when you make purchase order, okay, whenever you are making a purchase order or whenever you are giving a purchase order, PO must contain the price. PO must contain what? Price.
Price.
PO must contain price. Without price, you cannot create a purchase order. Without the price, you cannot create a purchase order. Now, what price are you going to indicate in your purchase order? Are you going to indicate the approximate average price, or you are going to indicate the rough amount, whatever comes in your mind?
Approximate price.
You're going to put the approximate price for the product that you want to procure. Now, there are different products in milk available in the market, but assuming you will always use heritage milk, or you will always use milk which comes for 20 rupees per 500 ml. So purchase order, let's say I put 20 INR. Purchase order I put 20 INR, but due to some reasons, there may be different fluctuations in the market prices. Agree?
Yes,
Due
sir.
to different reasons, you may get milk for higher rate. There may be a promotion or offer going on. You may get lower rate, or there may be shortage in the milk in the market. At that time also you may get higher prices. Agree? Right?
Yes, sir.
Assume PO you created for 20 rupees. Now milk received. Okay, milk received. When you receive the milk, you will also receive the bill. Right? Without bill, will somebody deliver milk to you, or milk comes along with the bill? When you place the order, you will receive the product. Along with the product, do you also receive the bill or not?
Yes, sir. Will receive.
Will receive.
Right? You will also receive bill. Now, milk received is 20 liters. Bill received, let's say 820 rupees. Bill received for how much? Bill received for how
820.
much? 820 rupees. Now, is this according to your purchase order rate, or it's a different rate?
It's different.
Different rate.
It's a different rate, which means there is no rule to have same rate in the PO and GRN. What is GRN?
Goods receipt note.
What is goods receipt note?
Milk.
So in our case, it is milk. So whenever you receive any product, you will get a delivery note or a delivery slip, because your milk packets may be packed in a container or may be packed in a box. Agree? On that box,
Yes.
it is written what is there inside the box. Correct? If it comes in a packing, on top of the packing, it is clearly written what is inside. Yes, no?
It is GR.
Right? So that is nothing but your GRN, goods receipt note, which will have the list of items that are received or delivered to you. Assuming on that the price is mentioned as 820 rupees. Now, according to you, what is the cost? What was your
820 rupees.
estimated cost? 800. But what was the actual cost?
820.
820. Is it the same, or there is any difference?
Difference of 20.
Your estimated cost and your final cost, are they same, or are there any difference? There is a difference, right? Now, you'll have to understand differences from PO and GRN. Now, try not to get confused, because I'm not talking straight away any point. Let's say PO is 20 liters and you received 20 liters. Correct?
Yes, sir.
You placed order for 20 liters and you have received 20 liters. Is there any difference in the quantity?
No.
No.
Or you received whatever you ordered? You have received whatever you have ordered, correct? Let's say your PO is for 800 INR, your GRN is 820 INR. Is it the same or there is any difference? Is it the same
Difference
or
in GRNs.
there is a difference? There is a difference in quantity or there is a difference in value?
Value.
There is a difference in value. Agree, everyone? There is a difference in the value. Now, how PO value is calculated? How is your PO value calculated? How this 800 has come according to you? What is your logic? How
Based
did
on
we say that
quantity.
800? PO value is equal to
Quantity into price.
PO quantity into
PO
PO
price.
rate.
Yes.
PO rate or price. Correct? All these things will look very simple, but if you are not good at these basic fundamental calculations, you will never understand FIMM, FIST integration conceptually. You may be able to do it from configuration side, you may be able to write the accounting entry, tell the accounting entry config, but if somebody gives you a business scenario or you're in an organization wherein you have to practically configure FIMM, FIST integration, you'll have to test this. Unless you are good at the basic understanding from the scratch, it is very difficult. Okay. Now, your PO value is coming from a formula called PO quantity multiplied by PO rate or PO price. In this, PO value 800 is equal to what? 20 into. So if we wanted to buy 20 liters. So we were talking about price per 500 ml. So to make 500 ml into 20 liter, how many packets are needed? According to you, 500 ml is a packet, correct? That is what we have listed here.
Yes, sir.
Right? This is what we have listed here. Now, if I put how many packets are required to make 20 liter of milk?
40.
40.
8.
So 40 multiplied by 20. Is this right? Yes, no? Am I clear? This 800 breakup?
Yes, sir.
Okay. Now, next one, how GRN value is calculated. How GRN
Based
value is calculated. GRN is something that you are receiving the product, right? According to vendor, what was the GRN value? 820.
Yes, sir.
GRN is
Yes.
nothing but value of the material that you have received. PO is nothing but value of the material that you have ordered. Your ordered quantity, your ordered value need not be same as your delivered quantity, delivered value. There may be differences, right? You may order 100 quantity, but your vendor or your shopkeeper may have only 80 quantity. Instead of 100, he will deliver only 80. He will tell the stock is not available. Correct? Huh? So there is no rule. Do not go by a logic called if you order 10, you will receive 10. It is not the case. It may be ulta also. Now, GRN. GRN value is equal to, what will be the formula? This is GRN quantity multiplied by GRN rate or price. Am I correct?
Yes, sir.
Yes, sir.
Now, this, if I have to say, GRN value is 820. How is this 820 coming? GRN quantity is how much? We have received 40 full quantity.
40.
What will be the price if I have to divide this 820
20.5.
by 40? 20.5. 20.50. Now, where is the difference? The difference is in the quantity or difference is in the value?
Value.
Value.
In this case, there is a difference. Now, difference is in value. Agree with me? How much is the difference?
0.20.
How much is the difference value? Your GRN value is 820, but your PO value is 800. What is the
20.
difference?
27.
20 is the difference. 800 minus 820 or 820 minus 800. Either ways you take, because since we are talking PO GRN, I'm writing PO value first, GRN value next. Right? 20 is the difference. Now, difference is due to what reason? What is the reason for your difference?
Like price variation.
Difference is because of price variation. What price variation? Per unit price variation or overall value variation?
Uh, per unit. Per unit.
Agree? Difference is because of per unit price variation. Not, you're not supposed to consider my value was 800, my value was 820 here, so there is a difference. At the end, your difference 20 is correct. You are going to achieve the 20. But what is the reason for this 20? From where this 20 is coming is what you have to focus on. This 20 is coming because you have placed order. You have placed order assuming 20 rupees per packet. Am I correct? We have placed order assuming 20 rupees per packet, but we have received each packet for how much? Is it for 20 or different amount than 20? We've received different amount than 20. At what rate we've received?
20.50.
20.5.
We have received at 20.50. It is due to difference in the per unit price. This is due to difference in per unit price. Now you have to pay very good attention from now on. This is due to per unit price difference. Now, whenever there is a difference between PO price and GRN price, it will result in price difference. What it will result in?
Price
Price
difference.
difference.
If there is a difference in your PO and GRN, we call it as price difference. We are not going to call it, we will never call it as value difference, because value difference is the total amount. You're not going to compare the total amount. You are going to compare per unit price to arrive at the difference. Right? So in short, how you are going to calculate your differences? Ordered quantity, I'll say delivered quantity. What is the order quantity? 40.
40.
Yes.
What is the delivered quantity?
40.
40.
40. Is there any difference, or it is fully delivered?
Fully delivered.
Fully delivered.
Fully delivered. Now, let me put ordered price, delivered price. What is the delivered price?
20.15.
20.50.
20.50. What was the order price?
20.
20. Is there any difference in the price?
Yes, sir.
Yes.
Right? Now, even when you do this in the system is also going to look at in the similar way. It is going to look at what is your ordered quantity, what is your delivered quantity. Similarly, what is your ordered price, what is your delivered price. Now, ordered quantity, there is no difference. It is the same. Delivered price, ordered price are not same. There is a difference. So in short, difference is coming from price. So we call it as price difference. What is the difference? Price difference. How much is the price difference? 20 minus 20.5. How much?
Point, 0.5.
Is equal
0.5.
to 20 minus 20.5. Negative or positive?
Negative.
Negative, right? 0.50, or in short, I'll put minus, or I'll put in brackets. Okay, this is the price difference. Agree? Now, how you have to calculate the price difference, or how system is going to calculate the price difference? Now you know what is the price difference per unit.
Yes, sir.
Now, system will calculate price difference, quantity into price difference rate. Now, what is your quantity?
40.
40.
40. Now, 40 into what is the rate?
0.5.
20.
What is the difference rate? Difference rate.
0.50.
Difference rate.
0.50 is the difference rate. Right? We're talking about price difference quantity multiplied by price difference rate. This is your price difference rate. 20 is your PO price, 20.50 is your delivery price. So the difference between these two is 50.50. Which 0.50, positive or negative?
Negative.
Negative,
Negative.
right? This is your price difference. If we do a calculation, is equal to 40 into minus 0.50. How much it will be?
Minus 20.
Minus 20.
Plus 20 or minus 20?
Minus 20.
Minus 20.
Minus 20. Okay. Is this a positive difference or a negative difference?
Negative difference.
Negative.
This is a negative difference. Agree? Now, according to you, you thought you will purchase it for 800 rupees, but you ended up purchasing it for 820 rupees. You spent more or you spent less?
And more.
You have spent
Yes,
more.
more.
You spent more for this. Now, the reason you have to understand this, because this will have a financial impact. This will have a journal entry or this will have an accounting entry. Now, your price difference, let me write this here. Price difference will have financial impact. That means accounting entry will get generated. Wherever you're talking about financial impact, we are talking about financial entry or accounting entry or journal entry. Am I clear? When you're talking about accounting entry or a journal entry, you will either have a debit or have a credit.
Yes, sir.
Correct? I can either have a debit or I can either have a credit. Now, where is this price difference amount 20 will sit? Is this going to sit on the debit side or on the credit side? Now,
Credit side.
in your interview, you are going to be questioned at this point. I know everybody will tell now, by now you also would have understood how to calculate price difference. Correct?
Yes, sir.
You will calculate my PO quantity is 40, my PO rate is 20, 40 into 20, 800 is my PO rate, PO value. GRN is received 40 into 20.5, 820. 800 minus 820 is 20 is the difference. Now the question comes here not for the 20. The question is exactly on the point where you are going to take this 20. What you are going to do this 20. Are you going to debit this 20 or credit this 20? If you're debiting, why you're debiting this 20? If you're crediting, why you're crediting this 20? This is where your interviewer will ask you to explain. Till here, now everything was straightforward. You might find it a
Yes, sir.
little difficulty, tricky at the beginning, but by now you would have got the calculation logic. There is nothing complicated in it, but we are trying to elaborate as much as possible so that when you review it, you will get the logic. Now, how we got this 20 difference? Any doubt? Any doubt on how we have got this 20 rupees as difference, price difference? Anybody?
No, sir.
Oh, sir.
Clear, right? How we've got this 20 as the difference? Now, let's try to write. So do not think too much because I'm not connecting the points. I'm just leaving the dots. Right? I'm going to connect all these dots in the upcoming sessions. Right? You do not try to connect the dots because I'm not explaining you in the actual sequence. I'm only going to create a dots in your mind. Now, you have something called material valuation. What is it called? Material
Material value.
valuation. When you're talking about material valuation, how you're going to valuate your material. So your material valuation will have something called price control. Your material valuation will have, what is it? Price. What is that called? Price control.
Price.
Now price
Yes, sir.
control has two elements. One is S and the other one is V. Any idea what is S? What is V?
Standard price and moving average.
S is standard price, V is moving average price.
S is standard price, V is
It is for sale, moving average
moving
price
average price.
for
Now, this is
purchase.
something that you are going to decide at the beginning of your project, whether to evaluate your material using standard price or using moving average price. How you are going to evaluate your material is understood or is identified based on the price control in the material master. Where do you find the price control? You are going to find the price control under material master. If your material master price control is S, it's a standard price. If your material master price control is V, it's a moving average price. Clear? S and V.
Yes, sir. Yes, sir.
Now, currently what we have purchased, we've purchased 20 liter of milk, and this is what the value that we've received. All right, 820 is what we've received. This accounting entry, this accounting entry is different if you are evaluating material using standard price. Accounting entry is different if you are evaluating material using moving average price. So you may get the same question, right? If PO is raised for 800 and GRN is for 820, okay, what is the accounting entry if material is evaluated by standard price, the material is evaluated by moving average price. Now at this level you are going to get the questions if you are talking about FIMM or FIST integration. So you may get simple question like this: if I raise a PO for 800 and if I receive the GRN or goods are received for 820, if or what will be the accounting entry for it? If your interviewer is not mentioning about standard price or moving average price, it is your responsibility to tell or to bring these 2 points while answering. If you're straight away telling the accounting entry, inventory account debit, GRIR account credit, then he might ask if there is a difference. Now it is very clear that there is a difference of 20, correct? Huh? It's very clear that there is a difference of 20. Yes, no? PO and GRN, there is a difference of 20. So you
Yes,
have
sir.
to specifically answer, you have to specifically explain that 20. That is the only reason you have been asked this question. You'll get these kind of questions only to check whether you are touching that point or not. I'm not convinced if you're not explaining me the theory or logic behind that 20. Even though your accounting entry, your explanation is a little here and there, but if you're touching the point, I am fine with you. But most of the people, they try to avoid this. They only tell the accounting entry, this account debit, this account credit. Then if the other person is starting to put cross questions, assume that he understood or you did not get my question clearly. That is why they are asking you, they're making you understand their question clearly by adding additional cross questions to the same point, to the same discussion. Clear? So the way you are answering to a question lets the other person understand whether you are clear with my question or not. Let's say if material is valuated by standard price, what will be the accounting entry?
Inventory account, debit, GRI, credit.
inventory debit, GRIR credit.
Price
The inventory
difference
is
debit.
price difference.
Debit. Debit.
Price difference debit. Okay. Now, in case if your material is valuated by moving average price,
Same.
same entry.
Yes, sir.
No, correct. If I have to put this monetary values against each line, inventory, how much I should put? Inventory debit,
Inventory
800.
800.
800. GRIR,
820.
820.
820. Price difference,
20.
20.
20. So if I have to put this, okay. Now debit credit matching,
Yes.
okay. In this case, inventory amount,
Same.
800. Price difference, 20. GRIR, 820. Correct? Yes, no?
Yes, sir.
Do you find any difference between these two accounting entries?
No, sir.
There's no difference in the accounting entry. There is no difference in terms of amount. Then why we are talking about standard price, moving average price? What difference we were able to see with standard? What difference we were able to see with moving average? Literally, there is nothing. Correct?
Yes, sir.
No. Does this mean there is no difference between standard price and moving average price?
It's there, sir.
There is a difference. Where is the difference? I'm not able to see any difference. In fact, you are also not able to see any difference on the screen. Right? Now, the difference is here you will get 820. There is no price difference in your moving average. Moving average, do we get price difference? You will not get price difference in moving average except when there is no stock. Okay, you will not get price difference in moving average except in what condition?
If there is no
Except
stock.
what? When there
No
is
stock.
no stock. Okay, when you have no stock, only then you are going to get price difference. When you have a stock, there is no price difference in moving average price. Do we have stock or not currently?
We have, sir.
You are receiving, so obviously stock is there. When you are sending, then your stock may get exhausted, your stock may get
Consume.
cleared. Right now you're receiving the stock, which means the stock is there. Whenever you have stock, there is no point of price difference in moving average price. Am I clear?
Yes, sir.
Whenever you have stock, there is no point of price difference in moving average price. Now, in case of standard price, okay, so you'll have to understand material is always valuated by standard price. Okay, now what is the condition that we are talking about? What is the accounting entry if material is valuated by standard price? Any material valuated by standard price is always valuated by standard price. This is called as preliminary valuation. What is this valuation?
Preliminary valuation.
Preliminary valuation. You may get a question, what is preliminary valuation? Do not be blank. If you are blank for preliminary valuation, no matter what you're talking about, FIMM integration is of no use. If you're not aware of preliminary valuation, there is no point. I'm not convinced whatever the answers you are telling about FIMM integration. I am clearly making my mind that you have knowledge which you have read from the external sources. Right? Now, standard prices updated in the material master. From where standard price will come?
Material master.
If you are maintaining your material as standard price, you will have to update the standard price of the material in the material master itself. Now, there is something called standard cost estimation is to be performed. What estimation?
Standard cost estimation.
Standard cost estimation is to be performed if you want to evaluate material with standard cost or price control SS. You must maintain standard cost estimation. Now, during any goods movement, what is goods movement? Material inward, material outward. In short, am I clear? Stock in, stock out is
Yes,
nothing
sir.
but goods movement in SAP. Now, in accounting, you call it as debit credit. Am I clear?
Yes, sir.
In accounting, what do you say? You say either debit, you say either credit. But in debit, you have different scenarios. In credit, you have different scenarios. GL debit, customer debit, vendor debit, asset debit. Yes, no. Special GL debit, special GL credit. Similarly, in your logistics or in your EMM side, you will have different goods movement. Each movement is indicated by movement type. Okay, so in short, whenever you talk about goods movement, either you're talking about goods inward or goods outward. In short, stock coming inside or going outside. Clearer? Coming in for what purpose? You are purchasing, you are transferring, you got a return. When you are sending out, you are selling it or you are returning it, whatever it is. So due to any reason, if stock is coming in or stock is going out, that is termed as goods movement. During any goods movement, material account is always multiplied by the standard price maintained in the material master. Clear?
Yes, sir.
During any goods movement, no matter what kind of goods movement it is, your material account is always multiplied by the standard price maintained in the material master. Okay. Now, according to this, your inventory is nothing but material. So if we assume This material standard price is 20. Now this inventory 800 could be the breakup of 40 into 20 from the material master, correct?
Yes. Yes, sir. Yes, sir.
40 into 20 from the material master. Now this GRIR, now GRIR is always multiplied by the original GRN slash invoice price. In this case, you have original GRN price or invoice price is 20.5, correct? 40
Yes.
multiplied by 20.5. Is this correct?
Yes, sir.
Now, price difference will come into picture if there is any mismatch of price between standard price, in short, PO price, with GRN
Price.
or invoice price. Clear?
Yes, sir.
Now, how system is calculating this? It will simply take the value of your purchase order. If your material is valuated by standard price, you will have to strictly put standard price in the PO rate. Okay, if your material master shows 20 rupees, you have to show 20 only. You know that this material we get for 20 rupees, you're not supposed to raise PO for 21 rupee. Okay, now
That would be including tax or excluding tax, sir?
excluding tax. Because some vendor, in some cases you may get tax, in some cases you may not get a tax.
Okay.
Okay, so these are not inclusive of taxes.
Okay.
Taxes will come into picture during invoice.
Okay.
Clear? This points whatever we have written now.
Yes, sir. Yes.
Now, on the other side, material is always multiplied by the GRN value. Okay, so GRIR is always multiplied by the GRN value, right? Because your moving average price is based on the actual price that you are receiving. There's nothing called standard price. Moving average price means every time you do a goods movement. So here, during every goods movement, material price will get changed or updated in case of moving average price. Clear? Now,
Yes, sir.
price difference will come into picture only when there is no stock. Okay, price difference will come into picture only when there is no stock. Otherwise, there is no concept of price difference. in case of moving average price. Am I clear?
Yes, sir.
Right? All these points is what they expect you to explain in your interviews. So you have to go to the scratch, to the base fundamental, and explain them why there is no price difference coming here. They expect you to talk these points. How your PO value is affecting your GRN value, how your standard price is affecting, how your moving average price is affecting, what is the formula for moving average price. If somebody is asking you how moving average price is calculated, how is this calculated? Equal to total stock value divided by total stock
Quantity. Quantity.
quantity. Correct?
Yes, sir.
Total stock value divided by total stock quantity will give you moving average price. Whenever you are adding or deducting the material, the price will keep on fluctuating because every time this will apply the formula. Value divided by quantity. Every time this happens, whenever there is a change in the material you are purchasing or you're selling, this will get updated on a real time basis for every transaction. Clear?
This will get updated only during GRIR or invoice verification.
Invoice verification, you are not hitting the stock. Your stock will get hit or your stock will get updated only when you do GRN. Okay, invoice verification, there is no update to the stock. Why there is no update to the GRN or inventory during invoice posting? If you look at your accounting entry, you have GRN, you have invoice. During GRN, inventory debit, GRIR credit. Correct?
Yes, yes, sir.
During invoice, GRIR credit,
Debit,
sorry,
debit,
GRIR debit,
vendor credit.
vendor credit. Now, only during GRN, your stock is getting updated, inventory.
Yes, sir.
During invoice, there is no inventory here. Do you find any inventory account being used?
No, sir.
No,
You're
sir.
not using inventory account during invoice. So, at the time of invoice, there is no impact to the stock. If somebody is asking you these kind of questions in your interview, the only way you can convince the other person is by telling the accounting entry. Theoretically, whatever you tell, the other person will still try to create more confusion to you. Clear?
Yes, sir.
All right.
Sir, it
Now,
might also happen purchase order and GRN price are same, but during invoice verification, the price is something else.
then you have something called
And price,
subsequent debit, subsequent credit concept.
then price difference will come during invoice verification.
That's what. That's where you do subsequent debit, subsequent credit.
Okay, okay.
So there you will have the option to adjust only the quantity or to adjust only the value. In short, you can adjust the material value or material quantity.
Okay, sir.
Okay, so that we will see separately when we are actually doing this integration points practically on the system. We'll raise a PO, we'll create the same scenario, we'll replicate it.
Okay.
Okay. Any doubts so far?
And this sometimes we receive freight and other charges, no, sir? This will also add it to the product cost, or it will not? Loading charges or freight?
Something called landed cost. Okay,
Okay. Okay.
so landed cost is nothing but your material plus other direct charges or other direct cost. Now, material, I know what is I am importing. Let's say if I am purchasing material for some 800 rupees or 820 rupees. Let's say the person who delivered has taken some 5 rupees as some tip, has taken 5 rupees as some tip. Now, how much you have actually spent? 820 or 825?
825, sir.
825.
Yes, sir.
Now, 820 is straight away material cost. Now, this
Yes, sir.
5 is a direct cost, correct?
Oh, yes, sir.
This direct cost can be inventorized or can be expensed out. When you talk about this direct cost can be inventorized, I will add this 5 rupees to the material price, which is 820 will become 825. Okay,
Then that would be our
so
standard price, right, sir?
right.
Okay.
I can directly add in the standard price or I can add during PO condition. So while creating the purchase order, I'll have the different conditions like freight conditions, various other conditions. Or I can have this expensed out. When I say expensed out, your stock will show only 820. This 5 will go and hit your P&L directly. So whatever the GL that you maintain against that condition, it will go and hit that expense account. Clear? These points we are going to discuss in detail. But before you understand all this, so you'll have to have the basic understanding of these points. Because when somebody is asking you questions or you're discussing about FIMM or ST integration related or any logistics related process in any of your interview, it will not be the basic level. It will be advanced level or it will be practical. Sometimes we do not even understand the terminology that they are using. How landed cost is calculated. You do not know what is landed cost. How can we answer? Correct? First
Yes,
of
sir.
all, we should know what is landed cost, how landed cost is calculated. We are not aware of what is landed cost. Can we answer such questions? No, right? So no other go. You'll have to keep quiet or you have to try something which will put you in trouble. This is one point. These are the very basic points that you'll have to understand to begin with. And then there is something on the sales side. Okay. If I say from the sales side, how profit is determined from sales. This is common question people will ask in your interview. How do you identify what profit you have made from a particular sale? Let's say sale of goods worth 30,000 to a customer. Now I am going to write an entry straightforward. Customer debit 30,000 and sales credit 30,000. Correct? Yes, no? Customer account debit 30,000, sales account credit 30,000. Is this entry correct? If your sale value is 30,000.
Yes, sir.
How do I know what profit I made from this? Because we are not debiting, crediting profit in this. And some people will try to put profit, debit, credit in their accounting entry. Upfront, gone. Because these are not related, these are not relevant to your SAP. These are related to basic accounting. These are related to basic accounting, which everybody must know if you represent SAP FICO consultant. I'm not going to bother if you are good at SAP or not, but this is a serious problem if you are not able to understand, if you are not able to answer these kind of a basic fundamentals in accounting. You may get a simple question exactly like we have written on the screen. How profit is determined from sales? If
Cost
we
of
have
goods plus
sold,
profit.
right, cost of goods sold is something that we'll have to use. How cost of goods sold is calculated? So they will backtrace. They'll take you from there to somewhere else. Now, when you get this kind of a question, you should not allow them to put any cross question. Answer in such a way that they will skip this topic, go to the next topic, which means you must know how to answer such kind of a tricky questions. If somebody is asking how profit is determined from sale, tell that profit is always determined based on cost of goods sold. If I know what is the cost of goods that I have sold, I know sales value minus cost of goods sold will result profit or loss. Correct?
Yes, sir.
Now here my sale value is 30,000. Sale is 30,000. Now before you sell, there is something called purchase. Correct?
Yes, sir.
There's something called purchase. Now purchase plus direct expenses is equal to COGS. This 30,000, if you are a direct dealer, okay, you purchased from the supplier and you are directly selling to the customer, nothing you are adding to the product, then I may say only my purchase cost. Let's say I purchased it for 25,000. Okay, I did not add any value to it. I just purchased, I just sold. Now this will be 25,000 my cost of goods sold. Correct?
Yes.
Now my profit in this case will be sales minus COGS. So here your profit will be sales is how much? 30,000 minus cost of goods sold 25,000, 5,000 profit. Agree? On the other side, if you have, let's say, you purchased for, let's say, 22,000, but you had different other expenses of some 4,000 rupees. Now how much your cost of goods sold will become? 26. Correct? Now in this case, what will be your profit? 30,000 minus 24 or 26? Is this calculation correct? Yes, no?
30 minus 26,000. 4,000. Yes, sir.
Is this calculation correct? Now people will expect you to explain the questions with possible examples, with possible scenarios like this. Because some interviewers will specifically ask you to explain, can you explain with an example? Can you take a business scenario wherein you worked on this? Can you explain me with a scenario where your customer had built something and you calculated profit from it? Because they will not ask you, or they'll not give you any scenario sometimes. They will simply tell you to, can you explain me with a business scenario or with an example? Theoretically, if you try to explain them, they will not get convinced. They may not understand your intention. The only way is you have to take an example like this. Take any example, put any value of your choice. Right? Here you are talking about the concept. There is nothing much to talk theoretically here. Am I correct? If I know basic accounting, I will understand, okay, I'm purchasing for 22,000. My various direct expenses are 4,000. My cost of goods sold is 26,000. So profit is calculated from a basic accounting fundamental, sales minus cost of goods sold. Then they might put cross questions from this. How will system know value of this product? In which accounting entry do I calculate it? There is no accounting entry to see the profit. To see the profit, you have to depend on COPA report. Which report?
COPA.
To see product wise profits, we have to refer COPA reports. Right? Your FI module P&L will not show product wise profits. It will show business operating profit. Am I correct? Is this correct or any correction? Right, your FI module P&L, whatever you draft, you're not going to derive the product wise profit. I can tell me what is the profit I made by selling this product. I cannot tell it by P&L account, correct? I have to go to that material wise COPA report, profitability analysis report. There is something called COPA in controlling module, CO module. There you will be able to derive product wise profits. So at this level, you have to go. When somebody is talking about FIMM or FISD integration, they might go to at any level, at any extent. But when they talk about all these points, it is hardly 10 minutes discussion. How many minutes? Hardly you are going to discuss 10 minutes about FIMM or FISD integration. But is it practically possible for us to explain everything in 10 minutes? Yes, no? Not possible. Can I practically ask everything on integration in 10 minutes? Not possible. But what I'm going to understand within this 10-minute discussion or 5-minute or couple of questions that I'm going to put you across, I'm going to understand how well you are at the concept, whether you are able to explain me with the business examples, whether you are having knowledge on business cases or not. I'm not concerned about whether you are aware of the SAP terminology, configuration steps, transaction code, table. I'm not convinced with it, especially when it comes to FIMM and FISD integration. There is something beyond that. So if you are able to talk, if you are able to explain at that level, you will be able to convince anybody. You do not even have to create a purchase order on the system, but still you will be able to talk effectively to anybody on this integration part. Clear? Any doubts so far? Any doubt, question? This is something which will take a little time for you to understand, right? So I suggest read through this once again and list out all the doubts, questions that you are getting. Okay, because what we've discussed is only the dots. We have not connected any dots. We have only discussed a dot. That's it. Do not try to compare. Do not try to connect this with any other thing, because we have not discussed in such a way wherein you can connect as of now. You cannot connect this to anything. That is why I'm telling these are only the dots, just to give you a basic overview of integration. Very, very basic. Clear?
Sir, once what would be the accounting entry once we reject the goods during GRIR?
It will be the reverse ulta. Debit becomes credit, credit becomes debit. The same entry will get reverse posted.
At that time also price difference will come, sir.
No, no, no. When you are rejecting, whatever the entry is posted as it is will get reversed. Debit becomes
Okay,
credit, credit becomes debit.
okay, okay,
Okay.
okay.
All right. Let me stop this.